So right now, crypto is stuck. Not dramatically, not catastrophically, just stuck. Bitcoin is hovering just below $70,000. Ethereum is drifting sideways. Altcoins are, well, doing their usual impression of a slow leak. And yet, despite the lack of movement, there's quite a lot going on behind the scenes because underneath this calm, the market is being pushed in two very different directions. And when that happens, it usually doesn't end quietly. So in this video, we're going to break down what's actually happening in the market today. We'll cover why Bitcoin still can't reclaim that 70k area properly, the macro forces quietly driving everything, what institutional investors are doing right now, why altcoins continue to lag, and the key signals that could determine the next move. Because this is no longer just a market driven by hype cycles, it's a market driven by liquidity and uncertainty. But significantly more importantly, something else which is exciting. So let's start with Bitcoin. Once again, it's approached that 70k level, and once again, it has failed to hold above it. Now, this isn't just random. This level has become a clear area of resistance. Each time price moves into it, sellers appear, almost as if they've been waiting there, which to be fair, they probably have. If you've seen my technical analysis videos on my other channel, you will also know there is a BPR there that is holding Bitcoin down currently. This tells us something quite simple. There is supply at this level, and until that supply is absorbed, Bitcoin is unlikely to break any higher. What's interesting, however, is not just the reaction, it's the lack of follow-through. Because despite failing at resistance, Bitcoin isn't collapsing either. It's holding above the mid 60k range as well, which suggests that buyers are still present in these areas. They're just not particularly aggressive right now. So if both buyers and sellers are active, that usually means one thing: indecision in the markets. So let's talk about the bigger driver, which is the macro right now, because at the moment, you're probably aware, crypto is not leading, it's reacting. Geopolitical tensions remain elevated at the moment, energy markets are still very sensitive, and inflation expectations are not exactly falling either, which creates a slightly uncomfortable environment for risk assets. When uncertainty increases, investors will usually reduce their risk, liquidity tightens, and volatility rises as well. And crypto, being a risk asset, doesn't particularly enjoy that combination. And this is why Bitcoin's price actually feels so hesitant right now. It's not that there's no demand, it's just that there's no conviction. It's a bit like everyone showing up to a party but nobody wanting to be the first one to dance. However, while macro is creating hesitation, something else is happening quietly in the background. Institutional demand is still there. Despite the uncertainty, institutional flows haven't disappeared. In fact, they've stabilized pretty rapidly. ETF flows over recent days suggest that capital is still entering the market, just at a slower pace. Institutions are clearly not panicking. They're not exiting en masse, they're simply taking their time this time. And that matters because institutional investors tend to operate differently from retail. They don't chase momentum, they don't accumulate. They don't chase momentum, they accumulate during uncertainty. That being said, they're also not being particularly aggressive, which suggests they see value, but they're not entirely convinced the downside is gone. In other words, they're interested, just not texting back immediately. And if institutions are cautious, it's no surprise that altcoins are struggling badly. Ethereum, along with most other major altcoins, are still underperforming massively. Not dramatically, but pretty consistently at the minute. I mean, they've just been basically slumping to zero, a lot of them at the moment. This is what we're seeing. We're seeing weak momentum, limited upside follow-through, and a continued dependence on Bitcoin doing well. In short, altcoins are not leading this market at all. They're following it. Just like every other time that Bitcoin drops, altcoins drop twice as hard. This is very typical in consolidation phases in the market. Capital stays concentrated in Bitcoin. Altcoins wait patiently. Sometimes less so. Ethereum is facing an additional challenge as well. Network activity has been very soft, which matters because Ethereum's value is tied to its usage, and right now usage isn't exactly surging for it. It's not broken, it's just not particularly inspiring at the moment, which brings us to the structure of the market, which is extremely important. Right now, Bitcoin is trading in a pretty tight range, roughly between the mid 60k area as support and then just below 70k as resistance, as you can probably see on the charts. And it's been doing this for quite a while now. For context, I think volatility is decreasing, volume is declining, and momentum is pretty neutral right now. And this is all classic signs of ranging consolidation or compression. The market is coiling essentially. Energy is building and eventually it will release in one direction or the other. And the longer this continues, the more significant the eventual move tends to be. Which is great, except for the small detail that it doesn't tell us which direction. So to figure that out, we need to look at the bigger picture. Right now, crypto is being pulled in two directions, as I said at the start of this video. We have bearish forces on the one hand, ongoing geopolitical tensions in Iran, sticky inflation, delayed rate cut expectations, and just weak short-term sentiment in the crypto market in general. And then we've also got bullish forces, institutional demand holding steady, strong long-term adoption, solid support, and market resilience despite all the macro pressures that we're under. And the result right now is a bit of a stalemate, a market that refuses to break down but also refuses to break out to the upside. This is not weakness, it's indecision, and indecision at key levels tends to result in a decisive move. So where does this leave us? There are three key things to watch. Macro developments. As we know, if global tensions ease, then risk appetite will probably improve. Bitcoin could break higher if we do see a closure of the war in Iran. If not, expect continued volatility or sideways chop. Number two is liquidity conditions. Rate expectations remain pretty critical. More liquidity supports crypto, less liquidity probably is going to keep it stuck. And number three is market structure. Watch the range, because when it breaks, that move is likely to be very meaningful. Right now, the market isn't telling us where it's going. It's telling us that it's preparing to go somewhere. And when it does, it's not going to be subtle. So if you found this useful, you know what to do. And as always, let me know what you think. Are we looking at accumulation or distribution soon? Either way, I think the market isn't going to be boring for long.